Hi there, Happy New Year, and this is about a company I think you should add to your watch list. This is not investment advice, understand that? Not investment advice, just information on which to base your research. All right, and now this is in a series of companies. As you know, if you listen to the weekend podcasts or listen to other videos, watch other videos, I'm pivoting out of companies that need cash, need to go back to the market to raise cash. I think 2019 is going to have a big bounce in the markets. We've had several things, several positive indications that'll help the market bounce, like China reducing their reserve rates for banks, the Fed saying they'll look at more data. Also, there's trade talks going on now between Trump and Xi Jinping. So there's lots of things happening, and obviously the big jobs number in America exceeded expectations. So I think we'll have a decent rally this quarter one, quarter two maybe, but I do think we are slowing down. There's a lot more macroeconomic data out there that's showing global companies or economies are slowing down, and this means you have to really adapt, and like I said, adapt and evolve, and that's what I've done with my strategy. I'm not looking at companies that are leveraged to growth, but I'm looking at companies that are kind of recession proof in a way, but also have cash and are either going to become profitable or are profitable with that cash in the next 6-12 months. This is one of those companies. It's Wey Education. Ticker there is WEY. And so what do? Essentially, they're an online educational platform. They're predominantly in the UK, but they do have business overseas, and they are expanding overseas. There's several parts to them, but they've got Interhigh, which is their core business. They've also got a B2B division, and that's supplying other sort of educational or local authorities with their software, their platforms. There's also other parts of the business called, these are new parts they're just developing right now. One's called Core Alexis. It's an online language school for teaching English as a foreign language. And there's also Infinity Education. It's a premium fee-paying online school offering a selective education. These are for sort of people aiming towards getting into the top universities in the UK, pretty much. Okay. Here are my 3 reasons. I'll give you a summary, but let's go into them on depth. Number 1, Cashgenerative. So in their final results for the year ended 31st of August 2018, they stated the group was well-funded for future expansion. Cash balances of 4.2 million at year-end, which have increased since. That is after 31st of August. So that means they haven't raised any money. That means they are accumulating cash. They are cash generative. They're not burning cash. They're making money, okay? Now, the year end did not make money, but they did make money the year before, and last year they spent a bit more money on marketing activities and growth in certain overseas territories, and I'll go through that in a bit. But, like I said, from year end, they've been accumulating cash. So, reason 2, straight into it, growth. Final results year ended. So the turnover increased by 72.6% to 4.2 million. This is a company valued at around about 11 million. Okay, that's with a 8.9 pence, 9 pence sort of share price. Adjusted EBITDA, earnings before income tax, depreciation, and amortization, up 162%. And they say turnover, this is the thing, shares are about what's going to happen in the future, all right? They're a little bit about what's happened, but as with all things, results are historical. When they release their final results, any company, they can be 6 months out of date. So, turnover is expected to grow significantly. I love that, again, in the current year. So that's good news, all right? Let's look at this. So, David Massey, Executive Chairman, he's now stepped down for health reasons, but I'll go through that in a bit. He said we had an excellent year in terms of turnover, and we are well placed for future significant growth in the current year and beyond. So even beyond that, he's very significant, because I assume a lot of the contracts they have are multi-year. So they said average growth of the group turnover in the last 3 years has been, this is phenomenal. Turnover has been 66% per annum. That's a growth in turnover. Some of this is, by acquisition, largely organic, though. The board's ambition is to maintain that trend in the current year and beyond, and any acceleration in overseas development should enhance this figure further. So this is what I'm looking for. I'm looking for companies that don't need money, but they have good growth. Okay, so they're growing, but don't need money. Okay, the core Interhigh business grew turnover by 20%, and it's expected that this will accelerate in the current year. This is very positive stuff. This is forward-looking statements, the outlook of the company, which is what share price is about. It's about the potential of a company. Okay, reason 3. Let's get on to that. Potential. This is reason 3 to add into your watch list. Now, home education is growing. Online education is growing. This is from the BBC. I found this when I just Googled this. And this was a recent source. I think it was in late 2018 this was done, I think. So, number of children being homeschooled has risen. And this is what Wey Education do. They do online, and it's homeschooled as well. Has risen by about 40% over 3 years. That's big. I mean, look at the figures there. They reckon about 48,000 children were being homeschooled in 2016-17. Of course, this has grown by now. It's grown by about 13% a year, if you look at the figures. And so more people are being homeschooled. Now, this is only up to age 16. So, Wey reckon in the admission document, they reckon there's more people than this. They reckon there's about 80,000, and because they do beyond 16 anyway. But this is only counting people that went to school and were pulled out by their parents. It doesn't include people who've never been to school, all right? So the figure is a lot bigger than that, but it's also growing. That's very important. The overseas market opportunity as well is massive. Is it 7,000 international schools globally, of which 2,900 follow a British curriculum. So the English language is invaluable. It's an international language. And this is a strength for Wey, So in aggregate fee income, in 2013 this was, of course, 5 years ago now, 6 years ago, it was about 21.4 billion and has grown to about 70% since 2009. And they reckon, the schools consultancy reckoned the market will rise to 36 billion by 2024. So it's a very big market. In addition, there's 1 million expatriate citizens living and working abroad. So this is the potential really for overseas. By the way, let's go into the actual different divisions. So Inter-High is their main business. It's core business. And like I said, they supply online courses between 9 and 24 years of age, people. So it's not just 16. So that figure we saw of 48,000, it's a lot bigger than that. They do a lot, a wider range, offering IGCSEs, AS level, A levels. On their website, they say, this is the start of the year, they say Inter-High is around 1,300 pupils. So paying around £2,000 per year. This is about 2.6 million. But they're growing. The business grew by 20%, and it's expected this will accelerate in the current year. So their main business is accelerating by 20% a year. So you can do the math of that. It's a company, like I said, if you look at the valuation of this company, it's valued around about 11 million, but 4.2 million, which the cash they have, which is growing. Okay, so strip the cash out of that, and they value about 6 million. All right, now they turn over, and they get very good margins as well. And this is growing exponentially, so it's a very good cash generative business, good margins, and it's growing in a growing field. Potential also. So Inter-High core business, there are 5 divisions. The other one is Wey Academy, and it's officer services of that. There's Academy 21 as well. There's an alternative provision, delivers services to children, local authorities, other public bodies for children with challenging behaviour. And this is a growing thing. There's a lot of bullying going on. Bullying is getting worse apparently in schools, which is sad. And this is a way that, parents can take the children out of school and educate them at home in a safe environment. And it's very clever, actually. Look at the software. It's not just, basic courses online. There's a tutor, a real tutor, that stands up at a whiteboard. And there's if you go into and look at the software, it's very clever. So you've got a sort of... I imagine it too. When I do a live video on YouTube, and you can have live comments on the side. It's like that. So the teacher will present on whiteboard, and there's comments they can ask questions. So it's like a real class, but it's just via video camera. There's a lot of software integrated, and every lesson is saved. So they can go back and look at certain lessons as well. So it's very clever in a way doing it. Good on potential. There's other parts of the group. These are quite new parts of the group. But if you look at the breakdown in overseas operations, UK up here, look, by far the biggest, 3.5 out of a total of 4.1 million turnover. 3.5 million, also 3.5 million is through UK. Every one of these regions pretty much expanded, apart from Africa, but this will be expanding. But every other region, look, if you look below there and up there, even starting with sort of Europe, went from 246,275. Middle East went from 165 to 183. Africa went down, but I think that will be going up because they've signed some contracts there. Others went up 106,000 to 132,000. So like I said, since year end, a new venture in Nigeria started. They're also progressing opportunities in Kenya and the Middle East. So that's happening. They are expanding abroad. By the way, this is another bit of potential here. So they've announced a sort of deal with China. It's been going for a long time, and it's hard to deal in China. Any company that's dealt with China, there's a lot of red tape. You know, because it's obviously a communist country, but there's a lot of red tape. But this was supposed to launch this deal. They had a memorandum of understanding with a Chinese company, a listed Chinese company, an educational company, and of course, you know, a lot of Chinese want to speak English because they see English as international language. So they're very up for it. But they've launched with a company called StarCube, and it is potentially very material development in the market. Some 200 million students learning English day to day in China. So it's massive. It's massive. They're going to start quite small. But this was supposed to launch. Let's have a look at this. This was supposed to launch. So the board, on the 1st of October, they said they hope to conclude all matters to do with proposed joint venture by the end of September. That slipped. That's one of the reasons why the share price is down. This is delay in this China deal. Doesn't matter though, because most of the revenue it isn't material to revenue, which is a bit odd, I think. There's a couple of reasons why I think the share price is down, but one of them, like this China JV, I think, you know, the potential was there when the share price went up, and because it's been delayed, it's gone down. Now they're sounding a bit cooler on this in their latest update in their finals. They did say. Shareholders will be aware the group believes the expansion into China holds great potential in growth in both revenue and profitability. However, the company is only prepared to make the investment when it's satisfied that on matters of transparency and compliance, the local systems adopted will be compatible with those required of AIM. All right, so there's a little bit of admin going on here about compliance and transparency, but they say it's still happening. It's still going ahead. But it's just taking more time. And I think in their finals, they've cooled a bit on it, but it's still happening. It may take longer, but I think it'll still happen. Well, who knows? Do you know what? Again, it doesn't really matter. It doesn't really matter because it's not material at the moment. They're still growing at a great rate without China being involved. Another little deal they've done is in Nigeria. So they've started launching traditional British curriculum to teach Nigerians curriculum online continues. They're pleased with the progress to date. Nigeria is massive, biggest economy in Africa. Like I said, they're dealing with the biggest country in the world, one of the biggest, most populous countries in the world, in China. Of course, second biggest economy in the world, China. And they're also dealing with the biggest economy in Africa. 186 million inhabitants. There's about 90 million of its population is under the age of 18. And they obviously see English as a very important language there. So there's a lot of potential there, and they're very happy with the progress there. So they will be expanding in Africa. But they've said here, and I'll just reiterate, you know, these are potential massive markets, massive. But, I've said massive a lot, I understand that in previous videos, but they've decided to be very prudent in relation to the pace at which it assumes overseas sales will grow. Because I think they've been, you know, annoyed by the lack of progress or the speed at which it's advanced in China. And so they said, you know, average growth of the turnover of the group in the last 3 years has been 66%. So, you know, even without these, big deals happening, the board's ambition is to maintain that trend in the current year and beyond, and any acceleration in overseas development should enhance this figure further. So that's a bonus, you know. Nigeria, China, Kenya, all these areas are a bonus. They're also doing stuff in the Middle East. They're a bonus. As it is, they still intend to expand by around 66% a year, which is big. So that's the 3 reasons. Let's put them through my filter, which is my cash filter, of course, and it looks like that. So capitalization, chart, asset, shareholder significance, simplicity, head-on shows. All right, so let's go with capitalization. Like I said, it's under sort of 20 million, under 15 million actually, around about 11, 12 million at 9 pence. And the reason why I look at companies like this, they are, 75% of the best performers started the year with a valuation below 20 million. All right, 50% of the best performers start the year below 10 million valuation. So they're in that bracket. I like that. So that ticks the box there. Chart. Look at the chart here. 22 months low, bouncing out of the biggest oversold position ever. You see the bottom right to the chart here. We're at bottom line. Closing high of 41.3 pence in 2018. It's now at just below 9 pence. And last fundraise, they raised £5 million at 22 pence. So you can see how far off and how oversold this company has become. And there aren't a lot of, I mean, that was where David Massey sort of was announced as, no, it wasn't there, it was down here actually. David Massey was announced he's stepping down due to ill health. I'll have to look what that was, that May. I think it was an interim, was it something? Oh, I think it was the delay on China, the interims. Yeah, so there's been some, hype built into this stock. Nevertheless, even without that, it's growing nicely, So the share price is not, but it's bouncing out of oversold. I like that. Back into, basically, if you don't know about charts or the RSI, Relative Strength Index, that's what that is. Below 30 is called oversold. Above 70 is overbought. As you see, it's massively oversold here. And then it's been some buying last few days, and it's jumped up. Not a lot. It's gone from 8 pence to 8.9 pence, so 10% up pretty much. Okay, A is for assets. Very good current assets. Total non-current assets, 2.3 million. Total current assets, 4.5 million. Almost half the market cap. And like I said, so total assets via liabilities, 7.3 million. That's minus all the liabilities. So very well capitalized company. Nothing to worry on the balance sheet there. S for shareholders, very tightly held stock. Ticks a lot of boxes, this company. Look at this. David Massey was executive chairman, but now he's ill health. He owns 18%. There's a Living Bridge, Gresham had it on 20%. Mighton Group hold 13%. Unicorn, 7%. Paul and Jacqueline Daniel hold 10%. By the way, she's now the CEO. She stood in there CEO. So CEO is a big chunk. So significant milestones coming up. Capital reorganisation. They announced this recently. They're reorganising the stock. The share premium account has about 7 million of it. They're reorganising this to be able to pay a dividend. They're not saying they're going to be paying a dividend soon, but when they're in the right place to pay a dividend, they can do, basically. So that will be an announcement on that. There's a trading update. So the last update they announced was the finals, which was about 3 months ago now, almost, and they've been quite regular with trading updates, so I expect one of those to come along. There's also news on the Chinese joint venture, which should have been done, should have been done in September. So it's overshooting massively. The initial launch was expected in September to be around 50 classes in 15 schools. This was viewed as a trial towards greater adoption in other cities across China in due course. So that's, ongoing, even though it's delayed. But like I said, not to worry about it. It's a bonus. Nigerian adventure, that's venture, I said, not adventure. Or it could be seen as an adventure. It's ongoing, so it could be news from that very soon. Simplicity, yeah, it's an online education business operating in many countries, but predominantly the UK currently. All right, so it ticks that box. Head-on shows. This is a risk, like I said. David Massey is the driving force behind this company, pretty much, the executive chairman. And I had him in the podcast about 2 years ago. I like the company a lot. I bought some stock straight away in the company. I thought there's massive potential here. And there's very little trading volume, and the share price just sunk and sunk. And in the end, I sold for a small loss, and it just went nuts. It went from like 5 pence up to 40 pence. It was 10 bagged. And David Massey's been the driving force behind this as a startup. So this is a risk. He had the reason why he stepped down, he had open heart surgery recently, and his RNS they're saying it didn't go as well as things, so he's having time off, and in the meantime he's stepping down. And so I don't know whether he'll come back, whether he gets better. Hopefully he will get better. Not just to come back to this, hopefully he will get better anyway. I was talking to David, nice guy. And so we'll never know. But this is a risk, because David was the driving force behind the company. So, but having said that, person who stood in here as CEO, well, Barry Whip is the interim exec chairman, non-exec chairman, but interim chief executive is Jacqueline Danielle. And the reason I have faith in Jacqueline Danielle, she's one of the founders of both Inter High School, which is the core of this business, and Academy 21. All right, so she's got a lot of experience in the game. She knows what she's doing. So it's not like it's gone to someone who has no idea. It's just a pity that David isn't there also helping because of his health. But who knows? So that, in my mind, is probably the biggest risk here for Wey Education. Plenty of cash, generating cash, lots of potential, growing market. But like I say, the share price has taken a knock. I think down to the delay on China, which is a bonus, really, anyway. and David Massey having to step down. Do your own research. This is not investment advice, okay? But I like this company, and I say I'm pivoting out of resource companies. I'm sort of adapting and evolving away from companies leveraged on global growth, because global growth is slowing down. We know that. You may think I'm insane in about a couple of months' time when the stock market is rallying, because that's what will happen, I think, next 2-3 months. But I think towards the end of 2019, we'll see a lot of factors. There's a lot of economic factors out there showing global growth is slowing down. And you can't just flip the switch and turn it back on within a couple of months. It will take effect. And I think we'll see a bigger sell-off towards the end of 2019. So I want to be in companies that can, satisfy some, can generate cash, essentially, and will be profitable for many years to come. And hopefully they're in areas that are a bit recession-proof, like this is education, you know. It shouldn't be hit by a recession anyway, or downturn in global growth. And other companies, like I said, social media, video, and gaming, and telecoms with Tuple should not be hit also. That's it. I hope you enjoyed the video. By all means, if you like this video and you want to get the next one to your inbox, hit the subscribe button, and there's a little bell there as well. Once you hit the subscribe button, you see a bell. If you hit that, you get notified straight away whenever I release a video. And by all means, thumbs up, and also comment if you've got any questions. I'll try my best to answer them. Comment below, and I'll do that. Okay. Thank you very much for watching. Muchos apreciados.